Good morning, good afternoon, good evening, folks. Thanks for watching Michael Zuber, One Rental at a Time. And I am here with the one and only, and yes, legendary Greg Dickerson. How you doing, sir?
Doing great, Michael. Coming to you live from the field, one shopping center at a time.
I love that. Always doing deals. I love the fact that you give us an hour. Just closed up looking at a deal. So that's a lot of fun.
I'm buying shopping malls, man, all over the country. I can't buy them fast enough.
Oh, I love that. You're going to turn, what are you going to do with shopping malls? You're going to turn them into multifamily, or what are you doing? What do you think?
Roller skating rinks.
Indoor soccer fields. Yeah, that's funny.
Yeah, man.
There you go. Hey, so I wanted to talk to you about the Fed, right? I think there's the Fed is in an interesting spot, right? They have clearly come out with the message, Jerome Powell, saying the inflation is transitory. And we've seen some signs of that. Lumber rolled over. Clearly, there's some chip issues in automotive. There's a lot of signs that this could be transitory. But there's more and more voices out there saying, you know what, the Fed's missing it, right? The grocery, gas, gasoline, I think 42% year on year was up. There's a lot of signs that this inflation may be stickier and the Fed might be behind. And what concerns me is if they are behind, the answer is going to be a sudden and unannounced rise in interest rates, which obviously would hit housing, as you and I know. So I thought I would stand back. We're here late June, and ask you, right, when you're looking at inflation, does it feel transitory to you, or do you think there's more out there that maybe has you concerned?
Yeah, some of it's real and here to stay. Some of it is transitory. Construction materials are up and down. That's cyclical. Commodities, fuel prices, those types of things. But when you look at real inflation, what they're not paying attention to and what they're ignoring is when there's 1.9 million jobs and 400,000 people still applying for unemployment. Wage inflation, and wages do need to go up in this country, but wages are going up because of what's happened with the support for the bonuses, unemployment bonuses. That's creating a situation where people are making more money, not working than they are working, and it's giving them leverage to negotiate higher wages, which is great. I think wages need to go up. So don't get me wrong on that. But what I'm saying is that is going up more and more and more across the board at different levels, which it needs to be. I mean, if you think about it, I was talking about it the other day, and $15 an hour, $10 an hour, $15 an hour for like hospital jobs. Like I had a friend of mine that stocked medical supplies in a hospital back in the 80s when I was in high school, and he was making $10, $12 an hour. And those jobs are still paying 10, 12, $15 an hour a lot of times in a lot of areas. Same thing with restaurants, cooks, hotels, and even restaurant managers, 60, 80, 100 grand a year. 10, 15 years ago, when I first started in restaurants 20 years ago, that's still the prevailing wages in restaurants now.
Interesting.
So these wages now are going up, which means that service industry, restaurants, everybody's raising their prices there. Airline industry, same thing. They're consolidating routes, raising wages, and raising costs. So I think there's a lot of that type of inflation that's not going anywhere. Food costs, labor costs, retail, all that type of stuff. That we're not going to see reduce anytime soon, especially the economy still overall is doing well. So as we get open back up and we do even better, it's going to be even more pressure on prices that we're going to see upward, not downwards, and competing for that labor, prices going up. Even in Wall Street, investment banking, they can't get people in investment banking now. So they're having to pay more and more and more. And, so it's at all levels that we all of a sudden now have this huge labor issue out there, and people are finally able to call their own shots and increase their salaries.
Yeah, that's funny. I didn't know we were going to go here, but this is exactly what I've been telling people on my channel in the daily financial news for 6 to 8 weeks. All these kind of input costs, these one-off costs, they can be absolutely transitory, right? Because we've never shut down an economy, which proved to be really easy, and also we've never restarted an economy, which is proving more difficult as the gears kind of work themselves out. So that makes total sense. But you're right. The thing that's got me is wage inflation. Because way back when I got my econ degree, we learned about price elasticity, and wages, right? Compensation is perhaps the most sticky thing, right? You make $15 an hour, and then you're doing that, and your employer comes in and says, nope, I want to pay you $14 an hour now. That doesn't happen, right? And we've already seen some of it, right? Chipotle came out, I think 6 months ago, and said we're going to be one of the first restaurants, fast food restaurants, to raise the starting salary. And then you fast forward like 3 months, they raised the price of all their goods 4%. right?
Yeah, yeah, and it's across the board. Food, you go to the grocery stores and supplies and just your daily living items, everything is going up,
Mhm.
except for shirts. I get Brooks Brothers shirts 3 for $109. So
Ah,
um,
there you go.
I look for sales, man. I get, I like to shop for the sales, but retail is different. There's always things there, but yeah, the core necessities that we need, vehicles are
Yeah,
through the roof. I don't see that coming down when the chip shortage thing goes away. I think car dealers
really.
have realized now, wait a minute, people are willing to pay for these vehicles. And,
Yeah.
so we'll see if that changes anytime soon. But the thing is, the more people make, the more they spend, the more you spend, the higher prices go. So what we're seeing on the consumer level is no different than we're seeing at the asset level. The
Yes.
more money that flows into assets, the more that they get inflated. The Fed knows they have a problem at the asset level. Stock market, S&P, I don't know, I haven't looked this morning what it's doing, but
It's at a record.
or
I talked about it.
again,
S&P and
S&P
NASDAQ.
every day,
Yep.
record high, Dow,
Yep.
record high, NASDAQ. So until they stop that, that's going to continue to inflate, and that's going to do so much damage. It's just not even funny. Same thing happens at the consumer level,
Hmm.
housing, vehicles, everything. I mean, so
Yeah.
there's real inflation that's here to stay, that the only thing that's going to change it is going to be an economic event, a market accident, that's going to be very destructive, and there's going to be no way out of it. So
Hmm.
the Fed fully understands they've got nowhere to go. There's no way to stop it. If they start raising rates, if they start tapering, it's going to be a deflation in assets, 30% or more potentially. It
Wow.
just has to. There's that much leverage and liquidity in the system that has to unwind, and they can't do that forever, or maybe they can. I don't know. I'm not. That's beyond my brain power to be able to compute. Can they keep doing it?
Yeah.
Forever. But it's a real thing.
Yeah. I mean, that's why the Fed or Powell specifically is he's really trying to. I think the one thing that Powell's trying to do is kind of clearly paint where he's going, right? I think, for example, in August is when they're going to start talking about tapering, right? They've taken the whole talking about it. They're like, no, we're going to start doing that. I
Well, and
think,
they send the flag, they send the flag up the flagpole every once in a while with every meeting, and they kind of test the
yeah,
waters and send messages. And you've got Janet Yellen saying, "Hey, we need to
yeah,
spend more. We need to do this. And if we don't increase the debt, we're gonna be going default." And
yeah,
so you got her on one hand going, you're not, you've seen the memes of
yeah,
Powell sitting there with the printer. That's hilarious. He needs two of them. He needs to be
yeah,
going with both hands now.
yeah, yeah, he
Um,
does.
so he's no dummy. Okay. He comes from the world of investment banking.
Yeah.
He fully understands the gravity of his situation and every word that they speak.
Mm,
And he, he's no dummy. He knows inflation is here. He knows it's real. Some of it's going to be transitory. And there are indications that, once we get back open, the economy's doing well, some of that. But again, if it's doing too well, it's kind of a double-edged sword. What they're really worried about, what the big holy cow is deflation. And
ah,
that's when you're going to start hearing them. When you hear them start talking about deflation, we got a big problem.
wow. So do you see? I wasn't going to go here, but why not? We've thrown it out there. Are you concerned about deflation? And I'm guessing deflation is most specifically talking about asset deflation.
Yeah. I'm not concerned about anything. I'm
Hmm.
just prepared for everything.
Oh,
So
I like that.
I know that deflation is real. It's already going to happen. It's a matter of when, and they're not going to be able to stop it.
Hmm.
So, that is at a high level. It's not inflation that's ultimately going to be the problem. It's going to be deflation. That's at the asset level across the board. That's the wealth of the, American. Well, it's not even America anymore. It's the whole world globally.
Right.
We're all tied together. So there's going to be a global deflationary um, period that we're going to have to go through, and we're going to have to go through it. The question is, how do we go through it? Where does that get written down? At what level? And what do we look like on the other side? And again, it's all, I don't worry about it. I'm not concerned because I'm prepared for it and I'm positioned for it. So what happens? Assets devalue, market comes down 30%. There's a lot of wealth that's going to get wiped out. That's a lot of people's retirements. It's pension funds, investment funds. It's people's, portfolios. So you just got to prepare for it and be ahead of the game for there. The dollar will remain strong as prices come down. The dollar strengthens. As we have market tapering, the dollar gets a little bit stronger.
Yep.
So you don't have to worry about that in that regard. Interest rates go up a little bit. Housing prices come down. So it's all checks and balances, and it kind of comes back into a line. But it's real, and it's on its way. So you just need to be prepared and be ready for it, and just make sure that you're, you have enough cash, to you don't let your portfolio go down to nothing, and
Yeah.
expect it to come right back.
Yeah. And that's, again, we've talked about this a couple of times, and that's why you're not one of the believers or preachers of cash is trash, right? Cash is an option on the future, or option on future opportunities. I believe you said before. And that's, that's what you've done to position yourself for the opportunities. You see it coming. You don't know when, but you see it coming. So you're ready should those events happen.
So for anybody watching who says cash is trash, send it to me. I'll take care of your trash for you.
Yeah, exactly.
And
that's good.
it's real simple. It's not my opinion, and it's not your opinion. It is what it is. You just look at the data. Whenever the market's down, whenever the economy is down, the dollar is up. It's just how it is.
Yeah.
When the world is coming to an end economically, everybody goes to the dollar everywhere in the world.
Yep.
That is the number one currency in the world, regardless of what you believe or where you are. It's not a criticism. It's not anything. It's the data.
Yeah.
It is what it is.
Agreed.
And anybody watching this, if I gave you a choice between, owning a portfolio of stocks of $1 million, long term in terms of what's coming, or having $1 million cash in the bank when that market is selling off, which one do you want?
Yeah.
Everybody's going to want cash.
Yeah.
You can't take your stocks to the grocery store.
No, exactly. Can't take a gold bar, things of that nature, for sure. And that's something that a lot of people miss. And I tried to do a video on that the other day. Maybe it was the Daily Financial News. That I use the dollar as a fear indicator, right? Sometimes when the dollar is getting stronger, it's actually a sign that there's fear in the market. There's fear, there's nervousness. Because you're right. What do people do? They rush out. They rush into the dollar, right? So, that's
well, the dollar is the number one asset on the balance sheets of governments around the world and banks around the world. I mean, it's their number one reserve asset. That is their hedge. So, cash is trash. I get what that means. As we're in an inflationary environment and the more money is printed, that theoretically should weaken the dollar, but it hasn't to the degree that a lot of critics have said it should have.
Yeah.
So it's very interesting to me that the dollar is not weaker than it is. And that tells you it's because of the, reserve status of the dollar. And I know China's trying to change that with a digital yuan, but nobody's going to fly into that. I mean, they might play with it and trade it and speculate on it, but that's never going to become a world reserve currency.
No, there's no chance. No chance. Well, this has been a lot of fun. I look forward to topic number 3. How can people become a part of your world?
Yep, GregDickerson.com. All my info's there. I have a YouTube channel, Greg Dickerson. There's a sportscaster with that name and me, and that's about all that pops up when you Google that.
Yeah. And folks, if you want to see 100 hours of Greg and I talking, there's a playlist listed below. He's one of my weekly experts every Monday at 8 a.m. Pacific. Thanks, buddy.
Yeah.